Hello to all my friends in the crypto space. If you are participating in the 2020 bull market, please take a moment and watch this video. I have some information that will help you tremendously. You might not like it, but it will help you tremendously. So I want to dive right in. There's a lot happening with Bitcoin right now. As everyone knows, we went from a high of around 60,000 crashing down in the last couple of days, and we've been hovering right around that $50,000 mark. And I've been paying attention to a lot of people in the space as they analyze these charts. Everyone is saying, you know, we have corrections in Bitcoin. If we want to go up, we got to go down. We had, you know, these 20-30% corrections over and over throughout this year. And this is just another one. Let's buy the dip. Let's be ready to blast off to 100K, 120K, etc. But there is a major reason why this dip is different. And I want to show you exactly what is happening. So this is going to be a little bit like taking the red pill in the Matrix. I'm going to invite you into the alternate reality where you're going to see through the game and understand exactly where we are. Because believe it or not, we could have known in February and March exactly what Bitcoin was going to do, move for move. And I'm going to show you exactly what that looks like. So here's another view on the daily chart. This is Bitcoin from February, January, February, all the way to the present moment. And so we've all been following this moment to moment, day to day, doing the technical analysis, following the news, trying to figure out when we're going to break through these resistance levels, and really feeling like we've got our finger on the pulse. But again, I'm telling you that this has played out exactly to plan. And I'm going to turn on cheat mode now so you can see what that plan has been and understand where we are and what this game is that we're all actually playing. So if I turn on cheat mode here, you can see this overlay. Don't get overwhelmed yet. I'm going to walk you through it. This move that we have just seen Bitcoin do is a textbook, almost one-to-one perfect textbook example of a Wyckoff distribution event. And so this is so important to understand because this sounds highly technical. There's lots of, you know, acronyms and little letters and stuff on here, but what you need to understand is that this is not a fluke. This is not just an interesting pattern that arises in markets from time to time. This is an executed and planned campaign that is run by the controlling interests that dominate the supply. So throughout all of 2020, when we were in that huge accumulation, we had large parties that were controlling the supply, and all of this bull run has been a textbook execution of a Wyckoff distribution. So let me explain this to you, because the thing again to keep in mind is that this is done intentionally to deceive the public and to take the most money from uninformed investors and retail traders. That is exactly why this schematic was developed. This was developed by a man named Richard Wyckoff, who in the 1920s and 30s was so pissed off at the rich interests controlling the market and, as he says, fleecing the public, that he wanted to educate the common investor on how these markets are actually run. And I think with the welcoming of the institutions into the crypto space, they're here. And now it's time for us to wisen up and understand what Richard Wyckoff was trying to educate the public back in the 1920s about how these interests move the market and what they're actually doing. So let's go through this 2020 bull run. I mean, you can see here these two graphs, you know, everything from, you know, this first move, the PSY to the BC up to the UTAD, and how it correlates exactly with this schematic of Wyckoff's distribution. So let's talk about each of these moves and why they happened, what they do psychologically, and how this whole thing plays out so that the controlling interests benefit the most on the way up and then on the way down. So let's walk through this. it's again important to note that Wyckoff put this together to educate us and to help us understand his concept of what he called the Composite Man. The Composite Man you can think of as, it's not just one person that's pulling the levers behind the scenes. That's why it's this Composite Man. All of these big interests, the big whales, collaborate together and are actively working together to execute this as if it was the intention of one person. So all the fluctuations in the market and in all the various stocks should be studied as if they were the result of one man's operations. Let us call him the Composite Man, who in theory sits behind the scenes and manipulates the stocks to your disadvantage if you do not understand the game as he plays it, and to your great profit if you do understand it, which is why this is so important. This is not all doom and gloom, but we need to understand the institutions, the big players have arrived, and they just pulled a doozy on the general public. So I really invite you to read this article. I will put the link in the description, but what I'm going to do now is I'm going to walk through these phases step by step so that you can understand what just happened in the 2020 bull market and why. So here we go at the distribution event as Wyckoff documented it. So before this diagram, there is an accumulation that lasts for a long time. I mean, years of accumulation where these large interests are dominating the supply, getting ready and building a cause for a up move like this. And when this happens, when we have this big rocketing rise in price, you can see, Bitcoin shot up from really around what, $10,000, $11,000 in September, October, up to $60,000. This is a huge uprun. So the way that this works is at a certain point in that parabolic move, they trigger this sequence. The first indication that this is going to start is with this PSY. This is the preliminary supply. This is the first time that those large holders dump supply into the market. They take this huge uptrend and they actually force a correction that kind of triggers and sets into motion these next events. The BC is the buying climax. I'm sure a lot of you remember this. I know I do. I bought in right along here, and I bought in again right around here when all of the news was coming in. This was around right around almost $60,000. This was just in the peak of that fever, and I remember thinking, oh my gosh, the price is never going to be lower again. Tesla's in, the institutions are here, we're in a bull market. This was just this fever run up to this buying climax. But this is all orchestrated, so what they do at the buying climax right around this time is they drop the price and start this trading range. So they dump supply into the market. We have a huge, all of a sudden, correction. This was that big first dump that we saw down to the AR, which stands for automatic reaction, because we have this huge, surge, and then they dump supply. And as soon as they're done dumping, they're still buying. So we get this, first kind of move, that bounce out of this first correction. This is the ST, the secondary test, in which price revisits the area of the BC to test the demand and supply balance at these price levels and for a top to be confirmed. So they're trying to confirm that buying climax was the top. Now we've got this trading range defined between the buying climax and the automatic reaction. So then, as they continue to manipulate the supply, they actually cause fear by bringing the stock from this, secondary high all the way down to the show of weakness or sign of weakness. And so I'm sure a lot of you remember this. This is when it went down to $43,000. Great buying opportunity for those of us that were following. But that was that show of weakness, sign of weakness, that $43,000 price that we hit right here. In early March, late February, and what that does is it occurs at or slightly below the trading range, and it's used to indicate a change of character in the price action of the stock. So this is the moment where supply becomes dominant. They've actually increased the supply all the way down, actually breaking the trading range, creating this lowest low of the trading range. And then we have this next move up to the UT. So there's a couple UTs that happen. These are up thrusts where, we hit a low, but there's this huge demand, this huge interest in this narrative of us going to 220, etc. So we get up to these up thrusts and then back down again. And so this whole range, what has been happening is it goes up and down and consolidates, and hitting this resistance, $60,000 has been the ceiling that we just keep bumping up against. This whole thing is engineered in Wyckoff's view to exhaust demand. And if you think about how you felt in the last 3 months, from this surge of that buying climax to just this, going through the ringer, it has exhausted demand, where people are no longer willing to buy at that $60,000 mark because we keep having these corrections, we can't get out of the zone. So that's what this whole phase in phase B is about, exhausting demand. So then what we all just experienced a week ago, that fateful Friday and then Saturday, where all of a sudden the price ran up, past 60,000, we broke out of the range, everyone was excited. This is called the UTAD. This is the up thrust after distribution. So they've already done their distribution and they've set up their short positions that they're ready to take on the way down. And then they do this final test. This is let me read it here. It occurs at the later stages of the trading range and provides a definitive test of new demand after the breakout above the TR resistance. And this is analogous to what's called a spring in the accumulation phase, where they dip the price really low to kind of trap all the bears in accumulation, and then they shoot the price up really high to trap all the bulls before phase D. So they've benefited the most from their control of the stock. They've exhausted the demand. They've set up their shorts, and now the whole sequence is taking this back down. So these LPSYs, this is where we are now. This is today's prices as we've fallen down from the 60, and everyone's saying, oh, this is just another dip like these other ones. It's just another dip. We're still going up. If you look at how this is engineered and what they're doing, just be advised that it might be a little bit longer until we're going up again. It's much more likely that we're going down into a larger consolidation that takes months for them to build their next position to make another move up. The market doesn't just move, the market is moved, so that the people that are selling people something at a huge markup can then benefit from the shorts when it's marked down, and they build up that accumulation, and then they can do it again. But this needs to cool off, and that's what this whole next phase is. The LPSYs, after testing the support, and a feeble rally on narrow spread shows that the market is having considerable difficulty advancing. This inability to rally may be due to weak demand, substantial supply, or both. The LPSY represents exhaustion of demand and the last waves of large operators' distribution before markdown begins in earnest. So we're here in phase D, and the big question is, what does phase E look like? It's very hard for me to look at this sequence and understand how much benefit those controlling interests were able to get from taking their stocks that they owned the majority of, skyrocketing the price, then exhausting that demand so that they could bring it back down and buy everything back at a discount, only to accumulate and do it again. So how far are we going down? Do we really think that after a perfect textbook Wyckoff distribution with no reaccumulation, we're just going to rocket back to the moon? I really challenge everyone in crypto to again, take that red pill, pause for a moment, and understand that the institutions that we wanted to arrive in this space have arrived, and they just left their calling card, a textbook sign of market manipulation to fleece the public. So just I know YouTubers that they want to show a positive a positive stance, and the videos that get the clicks are the ones that talk about how we're all going to $100,000 in April and et cetera, but just be advised, this happened, and this is not something that just happens by chance. every single one of these moves has a rationality behind it. And the rationality for where we are now is that they have been distributing their shares, they have been setting up their shorts, and now we're going down. So a lot of people that are, I would say, more realistic are talking about price targets in the, the 40s, maybe even lower. I'll just say you won't catch me buying this dip, because the dip, as far as this plan that has just executed is described, I believe that we're going to go lower. But I do believe that we are on track. I believe in the stock to flow model. I believe in the kind of logarithmic cycle. I do not think that this is the end of the market by any stretch, but I want to kind of sound the alarm and the wake up that things are not as they seem, that this whole sequence is to trap us in these cycles of elation and terror, fear and greed, and we were just manipulated, plain and simple. All of this time we were speculating, when are we going to break out, when are we going to keep going, and we could have known in February exactly what the map would look like to the candle. Again, I mean, this is candle for candle what just played out. So I think we have a lot more to look forward to in this bull run. I believe strongly that we'll see prices in the 200,000s, but we know where we are. This is a 4-month cycle so far, and it still calls for, we're here. We still have several more months to go of going down and reaccumulating, much like we did in let's see if we can go to max and put this on the logarithmic. Much like we did back in 2013, where we actually had, this is not the best graph, let me go to my own. So I believe we are more likely to be on a cycle like this one. Here we are, we had this big run up, and now we've had our perfect Wyckoff distribution, bringing us back down into the probably $30,000 range. And this is very consistent with what we saw all the way back in the 2013 bull run, where we had the big shoot up to 250, all the way back down to 50, 60, and then the big parabolic move up to 1200. So this is what I believe is happening, but I want to kind of, again, sound that alarm so people understand that we are not likely to just bounce off 50 or 40 even and continue this uptrend, that we were just worked, we were just manipulated and milked, and that really the options I see it are, we can either try to take our profits and buy back in the upcoming accumulation, or just hodl for dear life with that faith in the data that this is not over. So I hope that this has enlightened you. I know it's not the greatest news, but again, I think if we want to be as successful as possible in our trades and in our investment in crypto, we need to recognize that the institutions are here and they play by a different set of rules. And they know what they're doing, and what they do is they manipulate the public to take our money. So let's be smart. Let's get rid of the delusions and let's play this game. So until next time, thank you all for watching. I hope you share this with your friends in the crypto space. And yeah, until next time, cheers.